Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to just go over on the hourly charts an example of a bar by bar analysis of how I look at the Asia Close, Europe Open, and the New York Open and London Close. Now, I don't obviously trade all of these sessions. My main focus, primarily with my location in Perth, Western Australia, is I look at the Europe Open, the Asia Close Europe Open, the New York Open, and that's pretty much it. But I will go over bar by bar how I look at the markets and my approach just in keeping things very simple. Now I use primarily that New York closing charts. The red line here represents the Monday morning. In my analysis, I consider the first two bars of each day to be the pre-market. And so what I will do is I will draw a line at the high and the low of the pre-market. And we'll go each day and show an example of this. Now in this particular case, in the pre-market on the Monday, we had two bull candles. And I consider the second two candles the Asia Open. Now, there'll be people who, I don't know, that disagree, whatever. This is my analysis. This is what I consider the Asia Open and how I look at this. Now, primarily I see that in the second hour of the pre-market, could be market makers, whatever you want to call them, that we saw a breakout of the range of the first candle. And so what I will do is I will slide that low up to the high of the first hour. Then after we have the first 2 hours of Asia, now again, I'm not looking at this bar by bar. What I'm going to do is come in around the 7th hour, but this is my analysis of how I look at each bar. Now because the Asia Open, the second 2 hours, so the third and the fourth hours of trading, I consider that the Asia Open. In this particular case, we saw that the market made in the pre-market a higher high, a higher low. And then in the first couple of hours of Asia, we made a higher high again. Now, the way I observe this is that the market at this point now is pushing higher, and I perceive that as that buyers are in control. Now, as the market has continued to trade, it has broken higher again and formed a high. Now, as I come in on this 7th hour candle here, and I wait for the close of the 8 hour candle, which is 2 o'clock Perth time. That is the Europe Open, Asia Close. I see that from the pre-market to now that we have seen a bias of buying being in the market. Now what I perceive to be happening here after the close of this candle, being an inside candle as well, is that I would want to be buying with this market, that buyers are in control, and that this high that we have broken out and retraced from, had a pullback, I would see that the market would want to pursue retesting that. And the way that I can position myself is that I don't predict that. I want to put a limit order above the high of that 8 o'clock candle. And I would have my stop below the low of that candle. The purpose of that being is that I want to be picked up by the market, not predict where the market is going if I was to trade this. Now this is not what I would consider one of my normal best trade playbook setups, but reading this bar by bar, I'm able to look at this market and say that buyers were in control and that I have a opportunity to potentially buy at the bottom of that range, somewhere in the bottom of that range on a breakout with momentum. So I'm either going to be buying here at market and positioning myself with a stop somewhere below the low of this bull candle or below that bear candle if you bought inside of that range, or I'm going to position myself on a limit order to take a breakout with a stop below the inside bar. The hypothesis behind that would be that the market would then pick me up on the momentum of London's breakout. And again, if I was to be positioned into that trade, I would want to be looking at least 2, maybe 3 to 1, which this trade did give. 3 to 1 reward to risk, might have even been almost 4 on that trade. And an easy way for you to look at possibly looking for a level to exit on is somewhere either on the previous high of an hourly candle or an opening range where a candle's broke from. So now if traders were not into that trade, the next possible opportunity again is that we as we head into the US Open, we see now that the market has broken out and pulled back. Smart traders may have positioned themselves again with a limit order above the high of the last bear bar, and again their stop would be placed below that bear bar upon a breakout. So we see this pattern over and over again where London or the Europe session will break out strongly. We've got a 2-bar breakout and we have 1, 2, 3 bars down. And if you know much about pullbacks, 2 to 3 bar pullback is a very common pattern, and we also see that the market was closing significantly still off the lows in this particular case. But again, you're not predicting, you're not jumping in at market and getting caught into a smash down. You're positioning yourself on a limit order which would anticipate a fast breakout when that US market takes off again. So heading into the Tuesday. Now again, we're not looking at what we would have done or anything else. We're going bar by bar, and we're going to go back and do what we did on the last day. First 2 hours, I consider that to be the pre-market. So we draw our highs, and again, I'm coming in around the 7th hour candle to look at this, and I see a breakout in the Asia Open. So again, we see a close on that first hour of Asia, closing below the low of that pre-market, and we see that market auctioning lower. Now, as we come into the 7th hour, we see a very strong bull pullback, and then on the Europe Open, we see a bear candle present. And again, all we're looking at is pre-market, Asia Open. Is there a bias? We saw that there was lower lows being established by the market and lower highs. So now we have an opportunity to see that there is a low in place as the Europe Open takes off. We have an opportunity to position ourselves on a limit order break with a 1-bar stop. And again, we're looking at least a 2-to-1 risk reward on the range of retesting the lows of that range. So the market was picking us up with momentum that occurred, had already started from the Asia session. That market has then continued to pick us up and move very strongly. Now, in this particular case, if traders were to have set a target, again, they would still somewhere be looking down in that 3-4 to 1 return. But in this particular case, because we've seen such a strong move, we might want to look back and take a look at the Monday low as well. So we're always looking at the previous day's highs and lows for potential targets. But again, this market continued to auction into the US session, gave a 1-bar pullback before the US Open, and then again we see, if we just thinking again the first couple of hours of the US market, we see that low established, and you can see that even though the market traded down, it still found support in that initial balance of the first 2 hours of the US market. So again, we go to the next day, we do the same thing. First 2 hours, pre-market. Got our high and our low. We see in the Asia Open a very strong breakout. So again, we see off in the Asia session that buyers were in charge, and that for initial balance, the market did indeed still auction higher. It pulled back. It consolidated. So again, just thinking about the 3 types of breakouts that we talk about over and over again. A market will break out, fill more orders, and continue in the direction of the original breakout. It will break out, it will retest and go into a trading range. Go sideways into a trading range, it will break out, it will retest and fail, and then move very quickly to the opposite side of that range. We call that a false break, a reversal. So if you keep trading with that in mind and allowing the market to set up, so again, we come back into that 7th hour, we can see that the buyers were in charge. We had an inside candle. We saw a little bit more buying, a buying tail, then a pin bar, and then the Europe Open. So on the Europe Open, again, we saw very bullish, strong momentum. And again, sometimes traders, we feel reluctant, we feel like we're chasing a trade, we feel like we've missed it. But again, at the Europe Open, when we see a strong drive like that, that's an open drive with the original breakout that occurred. Now we can say that this was a bull flag, pennant, whatever you want to call it. But again, a 1-bar stop. We've been able to define our risk. That market strongly rocketed upwards, took out the highs of Tuesday. And again, then just coming back to something that we also talk about, the 2 a.m. to 5 a.m. London time frame, is New York time, establishing a high or low potentially for the session. Once these stops have been hit, and then that market moves into a consolidation. So we have the 11 o'clock, the 5 a.m. candle, which is the 11th hour candle. Again, these times are the opening times of the candle, not the closing times. So the market then auctioned down as we headed into the US Open, and then again resumed its original bullish activity to fill the gap before at the London close. So again, the 18-hour candle, London close, we can see that it's filled the gap, and again, sellers were able to step in the market again with a 1-bar stop, taking a limit order off the low of that. We see this selling tail, and that's a real telltale sign, similar to what we saw here. We see usually we'll see possibly a lower high and a lower low. In this particular case, we saw the higher high outside bar candle, but still we already knew between 2 a.m. and 5 a.m. There's a high possibility once these stops have been hit that the market may at least have a medium-term reversal. So again, we go back to our next 2 days. We see our pre-market open. So I draw my high and my low. The reason I draw the high across that doji is that the market closed inside of the range of that first hour. And then we see the Asia Open, so I will draw my line on the low of the initial bounce of the Asia Open. And this is a classic example. I'm not going to get into talking about the weekly initial balance, the Monday, Tuesday again, but this can play into it as well. So as we auction into the Europe Open, this momentum would have attracted traders into trading the breakout. Now, what's important about this is that the market has contained itself in this range from the Asia Open, and traders who are selling down here are selling at the bottom of a range that's been established. So they're selling low. And one of the things we want to do is we want to get in the habit of selling high and buying low. And yesterday is an example of buying on a breakout, but again, we're not buying the top of a range, where in this particular case you'd be selling the bottom of a range. And immediately the market reversed, took out the highs on the London Open. But again, important, start drawing the highs and lows as the market expands the range. This is critical. So again, we still see that the market was staying contained inside of that initial Asia Open short. So traders were, aggressive up top. Again, on the hourly chart, this is an example of where I wouldn't have necessarily had any trades at all. And then again, this is the Fed announcement at 2 a.m. Traders, once this market has gone sideways, again heading into the announcement, can use limit orders. You can do either or. Personally, I wouldn't. Once we see this reversal, I think I'd only be looking for the market to come back up and at least fill a gap up here. So it's always the path of least resistance, traders. And again, just going bar by bar, we see London's high at the 10 o'clock candle, which is the 4 a.m. candle. So London's in a range. Asia's stayed in a range, but again, each time we're going higher and higher, and as just heading into the US Open, we see a higher buying tail. So there's definitely interest in buying as the market starts to auction up, consolidates, hasn't been able to make any lower lows. There's definitely been evidence of buying underneath, but the safest way, if you are going to position yourself in the market, is be using limit orders and again the 1-bar stops. So we head into Friday, one of my favorite days to trade. But again, pre-market open. First 2 hours, I just draw my highs and my lows. So again, we're coming in around the 7th hour, which is right there. And we just draw our line. And what we see at that 7th hour is that Asia's open did break out. It's auctioned back and stayed inside of the range of that US session high from Thursday. As we head into the Europe Open, it gives a bit of a bearish pullback. London's Open is weak, smashes down, runs the stops on the bear side, traps traders short, runs those stops up to the top end, and then gives us our little gift. Again, talking about our time frames, between 2 a.m. and 5 a.m. normally we see the market set a high or a low range, buying extreme or selling extreme range for possibly the session. But on a Friday we see this pin bar set up at the 12 o'clock candle, and it gives us a 1 bar entry into the market. Again, looking for an opportunity where the market gives us a signal bar to position ourselves with a 1 bar stop. So we want to be looking for these at the tops and bottoms of ranges. So down here we saw an inside bar. Again, on the Wednesday we saw that market consolidate after running stops, but on the Friday this is a great opportunity, and what you want to be cognizant of is, again, now we've established a range. So once London's auctioned and opened up and set a high and a low, we have an opportunity to sell high with at least 3 to 1, 2 to 1 for sure, maybe 3 times that, depending on how that market breaks through. So when that market hits these lows, I'd be moving a position to break even. And we see a 1 bar pullback, and then the market do a full extension of that range. Let's just check what it gave us there in terms of distance. So we move that up, and we can see that the market basically did at least a 1.5 extension, but again, at least a 3 or a 4 to 1 return on that 1 bar risk. So again, just going bar by bar, we can see at the London close at the 18 o'clock candle, the market reversed, traders closing out their positions, taking profits, and going into the weekend flat. So take your time, traders, but start to go bar by bar, regardless if you're trading Asia, Europe, or the US session, or the London close. Start going bar by bar and look for these range expansions. Look to see who's pushing the range. Is it buyers or sellers? Expand your range, and then look for these opportunities where the market is either going to break out strongly, or it's going to give you an opportunity to be buying low or selling high, and then look for a measured move where there's an asymmetrical risk reward opportunity on profiting off that trade. Because anything is possible, always make sure that you manage the downside. And as you can see with my approach to the markets, I'm always looking for the maximum of a 1 bar stop on the instrument that I'm trading, and I'm looking for ideally at least a 3 to 1. And you know, if price action changes, I'd say the minimum is at least a 2 to 1, but I always want to be managing that downside. I know my maximum stop, and I'm brutal at hitting my stop losses. So hopefully you got some value out of today's video, traders. Go bar by bar, start counting these ranges and bars, breaking that market into opens and closes, and looking for the opportunities where the market gives you that window and presents the edge, and then look to capitalize on it. Keep studying, keep focused, keep discipline, and keep getting better, traders. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.